So, good evening, class. This class will look at the cash book. The cash book. Because so far we've done 4 of the books of prime entry. We have done the sales day book, purchases day book, sales return day book, purchases return day book. All right, now we are looking at the cash book. The cash book is a journal. It is a journal. But at the same time, it is a ledger. So we said that the cash book has a dual function, or it serves a dual purpose. All right. So why is it a journal? Because all journals are books of prime entry. When things happen as they happen, you record them, all right, into the book. So it is a book where original entries are made. But it is also so original entries are made. It is also a ledger because it has the shape of an account. It has a debit side and a credit side. All right. So you take note of that. Okay. Because it has a debit side and a credit side. So we will be looking at how to present it so that you will see the debit side and the credit side. All right. So that is that. Now, when learning a cash book, the first thing you need to learn to do is how to draw a cash book. So let's look at drawing a cash book. Drawing a cash book. Because you must understand that the cash book is a journal that is used to record all cash transactions. So the purpose is for recording cash and bank transactions. So anytime you see a statement that involves cash or bank, you will have to use the cash book. All right, so that is that. So let's draw up the cash book. Now we can have 3 forms of the cash book drawing. We can have a single column cash book. We can have a double column cash book, and we can have a 3-column cash book. So I'm going to go straight away and do the 3-column cash book, because in a 3-column cash book, what you would have seen in a single column cash book is there. What you would have seen is in a double column cash book is also there. So the 3-column cash book will have everything. So you have to open your book very wide. So if you are preparing, in whose books are we doing this? So in the books of, let's say in the books of UGBS group 5. All right. So let's say that. Now immediately you do that, then you put the heading your cash book. So how does the cash book look like? So we are going to draw the 3-column cash book straight away. So you have to draw it up nicely. It has a debit side and a credit side. So let me rule here in the middle for you to see. All right. So if it is a single column cash book, straight away, this is one side, one side. It's a single column cash book. One side will have just 1 column. But so I will draw this. And because this line is dividing the 2 parts, I will draw it like this. So it's just that my lines are crooked. And I know you will rule a better line than me. So we will have this. Now this is a 3-column cash book. So if it is 1 column, you just make it simple for your life. You just rule just one column. That's all. All right. So this is it. Here we go. All right. So if it is 1 column, you just keep only 1 column here, 1 column here. That's all. All right. So let me just rule something small for my date. All right. Then let me just rule something small for my ledger folio. something small here for my ledger folio. Then the dates will come here. All right, so here will be dates. Put your date there. Here will be details or particulars, whichever one that you write is fine. So let me even write particulars here so that you don't say, oh, say I saw something somewhere and it was particulars. Yours is details. It's the same thing. All right, so there is no difference. Okay. Then you put your ledger folio here. What is the essence of the ledger folio? It is telling you where the second leg of the transaction will be. You see, to every debit, there is a corresponding credit. So that one will tell you where the corresponding is going in the general ledger or in the sales ledger, wherever it is. All right. So the same thing, date, ledger folio. Now, if it is a 3-column cash book as I'm preparing here, the first column should be for discount. Now, what type of discount will be on the debit side and what type of discount will be on the credit side? We will discuss that. Then you have this one to be cash column, then bank. All right, so cash column and bank. So if there is no discount in the question, you just draw 2-column cash book. If there is no bank in the question, you just draw 1-column cash book. So that's how it is. All right. So since we are dealing with money and we are Ghanaians, let's put our CD sign here. If you have to put 0 zeros at the top too, you just put depending on the way the question is. All right. So that is that. And the date, for example, if it is 2020, you just put year 2020, year 2020. All right. So this is how you draw your cash book. It's as simple as this. All right. I'll come back and use this drawing to solve a question. So we will do that. Now, there are about, let me say, 4 issues in a cash book I want to draw your attention to. All right. The first one is the opening balance. All right. Now, so let's discuss that. The first item is opening balance. Where would the opening balance of a cash book be? Of course, does it have a debit balance or credit balance? Don't forget, cash is an asset. So an asset should have what kind of balance? A debit balance. So you have to know that the usual balance of a cash book should be at the debit side. So let's say January 1, 2020. So I'll have my balance brought down. So if there is, and the balances are always from the general ledger, all right. So or journal, because we use journal to prepare opening balances. So if the balance is on cash balance, then you bring it. If it is a bank balance, then you bring it. But ladies and gentlemen, guess what? A balance brought down could also be at the credit side. So on what grounds will you see the balance brought down at the credit side? Why do you think a balance brought down will be at the credit side when the thing is an asset? It means that the asset has tended to become a liability. And a typical example of the reason why the balance brought down can be at the credit side is because it is an overdraft. Because you can't have a negative cash, but you can have a negative bank account. So you can have an overdraft. So a question can even tell you that the cash book has, you can't have a negative cash, but in your hands, but you can have a negative overdraft. So bank overdraft, because you can withdraw more than what you have in the bank, given your arrangements with the bank. So that one, you can have a balance brought down. But because you are solving a question, sometimes theoretically, some question will say that the cash book has a cash part of balance. It doesn't make practical sense. But the overdraft, you can have a balance over there. So basically, that is one of the issues that you have to understand. The opening balance. It can be at the debit side, it can be at the credit side. The one that is at the credit side is bank overdrafts. Take note of that. Other than that, cash book should always have a debit balance. So take note of that. All right. So that is that. Of course, anytime you receive cash, you will debit because cash will be increasing. Anytime you use your cash to pay something or use your check to pay something, then you will have to be crediting the cash book because it will be reducing the amount you have in your cash or the amount you have in your bank. As simple as that. All right. So basically, that is that. So this one, also general ledger, you can name it general ledger 1, general ledger 2, or whatever folio you want to give it. It's not compulsory. Even in the exams, if you see that the question doesn't have the ledger folios attached to it, you can ignore that part of the drawing. All right. So that is that. All right. Then we have issues like dealing with cash. And I'm going to discuss about 3 of them. Then we talk about how to record the discount, which type of discount will be here and which type of discount will be at the credit side. We will discuss that. All right. So the first one that I want to talk about is cash paid into bank. Cash payment into the bank account. Now, let's say a customer has paid the company money by cash. So the customer paid cash. Let's say on January 2, customer Ama paid 100 or 200 cedis cash to us. All right. Then on January 3, the entity, so we deposited, the cash was deposited into the bank, account. How are we going to treat this? So clearly, you see that it's either, let's say we deposited 100 cedis in the first scenario, or let's say we deposited even all the 200 cedis, depending on how it is. I will use those 2 scenarios. Now, you see that the date here is different from the date here. So it means that in accounting, we said accrual concept. You record the thing as and when it occurs, all right, not as and when cash and cash equivalents are paid, all right, or received. So it means this one, on January 2, as I receive the money from Ama, what I'm going to do is that I'm going to say January 2, I receive cash from Ama. So I'm going to write Ama. Ama is the detail. And Ama probably is at my data. So it will go to my sales ledger. All right. So Ama deposited cash to me. So I'll write 200 Ghana cedis. He gave me cash. You see, so the corresponding entry will be in Ama's book. So if I go to the sales ledger, for example, sales ledger, I'm going to have an account for Ama. So Ama's account. So I will draw it like this. Now, probably Ama was owing me money, but Ama has paid. So I will say cash and record the corresponding entry 200. This is what we call posting. Posting, completing the double entry of a transaction. That is what we call posting. All right. So take note of that. Take note. One of the reasons why we use the cash book as a journal and a ledger, because it is because as a ledger, it helps complete, it summarizes transactions, because ledger summarizes transactions of individual accounts, and it also completes the posting. It is involved in the double entry for posting purposes. So as you see, we have done that. But on January 3rd, what happened? On January 3rd, we, the entity, we deposited the same money into our own bank account. So it means that the money is from us and it is to us. It is from us and it is to us. What do you see? What you see is that the moment I put this money in my bank account is going to increase. Is that not it? But my cash is going to decrease. Is that not it? So what you will do is that, so on January 3, I will write here cash. Okay, cash. Then, oh, sorry, I put this figure in the discount column, sorry. So this one is supposed to be here. All right, so that is that. Now, what is happening is that the cash is going to bank. So how much am I depositing? So let's say I deposited the whole 200. So I will put here 200. If it is 100, you put 100. That means you deposited only part of the money. So you put the figure there. But what is also happening is that my cash has reduced at the same time. So when I come to the credit side, January 2, what am I going to do? My cash is reducing. So it is reducing by 200. What is the narration? It is bank. So you see, one side of my cash book is having the same value to the other side, and it is between the same cash and bank. If it happens like that, that is what we use contra entry here, because we are not going to open any other ledger down there and say general ledger cash, because this one serves as a journal and at the same time a ledger. So it is there. So you put contra there. All right. So like the way we did AMA, and I open the sales ledger AMA account, I am not going to do create a bank account for that. This is my bank account. The same cash book is my bank account. So we will use a contra for that. So in a contra, you see that in the same cash book, the same amount, all right, is happening at both sides of the cash book. If here was 100, here was 100, I will still write a contra entry. One side is increasing, one side is decreasing. It is a contra entry, all right? So technically, it is netting of itself. Is that not it? So that is one thing you must understand. So you will be seeing cash paid into bank in some of your questions. Now, another one that I want us to discuss is cash sales immediately paid into bank. Cash sales immediately paid into bank, or cash sales paid into bank. Now, with this one, it is a little bit different. It's a little bit different. How do we treat this? Because this one, it will be on the same day. You receive the cash from the customer, and the same day you deposited into the bank. So it is not a different day. It's immediate. It's the same day. All right. In that case, you are not going to do one transaction in the cash side and another transaction because you deposited. Because it happened in the same day, you are going to treat it as if the customer directly paid you by check. Listen carefully. Cash sales immediately paid into bank is treated as if the customer paid you by check. So if you say that cash sales immediately paid into bank 100 cedis, you are not going to say it's a cash sales, so I received the cash, then later on you deposited into the bank. No. Because it's the same day and it is immediate, you treat it as if the customer himself paid the thing into your bank, or the customer paid you by check. All right, that is what that's how you will do it. So here you come to the cash book, and what do? So you write, let's say the date for the transaction is, this one was January 3. So let's say January 4. All right. So you write the narration of the cash sales. All right. So if there was a name that the cash sales was made into, you just put it in there. So there is no need for you to. So straight away it will go to your, what we call, if it is a sales account. So you create general ledger. Sales account is in the general ledger, and you probably call it a cash sale. All right. Then instead of putting the money into cash and later on going to deposit the cash, to straight to your bank. If it is the amount is there, you just put it in there. Straight away, you are done. That's all. If you also go and withdraw money from your bank, you go and withdraw cash from your bank, what do you think will happen? It is between cash and bank. So it's another contra entry. So you withdraw money from your bank. That means that the money at your bank is going to what? Reduce, but your cash is going to what? Increase. So it means that here, if let's say January 5th, that's the third thing you need to take note of. Withdrawal of cash from the bank, or let's say cash withdrawal. For business use, for business use, take note of that. For business use. Because if you withdraw anything for your personal use, it is called drawings. It's like a loan you have taken. Take note of that. Take note of that. If it is for personal use, it is what? Drawings. Take note of that. But if it is for the business, then means that the business is reducing its bank balance but increasing its cash account. So take note of that. But if it is for personal use, it will be drawings. So I will deal with that one very soon. So let's say you went to the bank, you withdraw cash for the same business. So what will happen is that, let's say the date is January 5th or something. What will happen is that the money at your bank is going to reduce. Is that not it? Because you have withdrawn money. All right. So now that you have withdrawn money here, you'll be looking at something like your cash. So your bank will reduce. Then when you come here, you write bank and your cash is going up. In that case, it is also a contra entry. All right, so that is that. But when you withdraw the money for personal use, like I was saying, that one will be drawings. So you write drawings. Drawings. And if it is cash you withdrew, you put it here. If it is check you withdrew, you put it here. So that basically, that is that. All right. Then let's talk about the discount. So the discount, this one, which discount is this? Which discount is it? Please, first of all, these discounts are cash discounts, not trade discounts. Cash discounts, all right? So that is that. So if you receive some form of cash discount, this one is the part that is relating to customers, all right? So you probably give some of them. So customer is paying you 100 cedis and you gave him a cash discount of 5 cedis. How are you going to record it? So that means that technically the amount of money, physical money you are going to collect from the customer is 95 cedis. So and he has discount. So here will be discount allowed. So the discount you give to your customers, and here is discount received. All right, the discount you get when you are making payments. So here, you know your cash book. This is your receipt side of the cash book. This whole side is the receipt side of the cash book, and this side is the payment side of the cash book. You only receive discount when you are making payments, and you only give discount when you are receiving money. Cash discount is for prompt payment, so that the customers will pay early. Take note of that, so that the customers will pay early. It's for prompt discount. And what is trade discount for? You remember? It's for bulk purchase. So that is how the discount works. So if you are receiving 100,000 from your customer, 100 cedis from the customer, and you give the customer, let's say, 5 cedis discount, how are you going to record it? So the customer was probably paying you by cash. You gave him a discount of 5 cedis. So here you mention the customer's name. So if it is Kofi, you write Kofi. And Kofi will probably be in your sales ledger because probably it's your data and he's paying you money. So what will you write here? You will write the 5 here. All right. And you will write the 95. If it is cash, you write it here. 95. So together, we'll give you the 100. Please don't record 100 here and go and deduct 5 from the other side. No. Do it on the same side of the cash book. All right. So the corresponding entry for this discount will be in the discount allowed account, which will go to your P&L. All right. So take note of that. The one that is reducing your sales figure is the one that is called the trade discount. That's what you do in the ledger. That's what we do in the sales day book tutorial question. So that is that. So this is how the cash book operates. All right. So that is that. If you are also paying somebody like 10,000 and the person gave you a discount of 2,000, you are paying. So how much do you think you record? So if the person you are paying is Ajwa, how much do you think you record at the discount side? 2,000. Is that not it? Good. And how much do you think if the person was paying you by check, then how much do you think you record here? Yes, your guess is as good as mine. You'll be recording 8,000. So that when we put it together, we are having this 10,000. All right. So that is that. Easy peasy. That is that. So you complete the double entry for each of the transactions that you do here. You post it to their corresponding entry. So if this is Kofi, you go to the sales ledger, you open Kofi's account, you put it there. All right. So that is that. That is doing the ledger aspect of it. All right. You see, when you post something into the sales the day book, you now transfer it into the ledger, but that place you'll be doing 2 transactions. All right. So from the sales day book, you go to the sales ledger, you put the person's name, the corresponding entry will be the sales account. Now, this one is a cash book serving as an account and as a ledger. So once you put it in here, you just go and do the corresponding entry in the general ledger or in the sales ledger or purchases ledger. All right. So basically, that is that. So this is how a cash book looks like. All right. So that is that. So what we are going to do now is to pick up a question in the next video on this cash book. Then we will solve it. The question will have a sales journal, all the things inside. Then we post it into the ledgers. Then we will continue to prepare our trial balance. All right. So see you in the next video. Thank you. Bye-bye.